Hey there, everyone. This is Ryan Smith, principal and founder of ThinkSBA, and welcome to another episode of the My SBA Loan Pro podcast, Face to Face. I'm sitting here today with John Homan. John is an SBA Loan Workout Specialist. John, welcome to the podcast.
Thank you, Ryan. You and I have known each other for a long time, and I appreciate your side of the equation, and mine is the other. And that's what happens when things go wrong with an SBA loan. And just as a real quick background, I'm a serial entrepreneur. Started out as an accountant of a $700 million company when I was 28. Also an attorney, ran a venture capital firm for a period of time, and worked in the M&A industry for more than 20 years, and also worked as a volunteer for a number of years with SCORE, which is a subset of the SBA that often does counseling to small businesses. And sometimes there's even a requirement from the banks that a SCORE person be assigned to sort of give some guidance. So I've been doing this a long time. There's only a handful of people, my count six, that do what I do. I'm the only one that has the kind of background. The other ones are bankers, which have their own perspective on the world. Mine is different in that I look at things. When we get into trouble, I look at things to how to make your situation better before we even get involved with the SBA. So with that said, there's really three kinds of loans that I deal with. Ryan knows way more about all this stuff than I do, but the 504, which is basically a real estate loan, 7A, which is a business acquisition loan or business expansion loan, and then most recently, people have run into something called EIDL, which is a disaster loan product that's direct from the SBA. Disaster loans have been around forever, but they've been greatly overused during the pandemic and for a lot of bad reasons. But with that said, we'll talk for a minute about how I got into this and what does go wrong in an SBA loan. So back in the 2007, 8, 9 time period when real estate was falling to hell. A friend of mine called. I was doing these SBA loan workouts, and when I got involved, what I found out was that businesses were going sideways, and the one that I hit head on right from the start was a franchise system that happened to be a tanning franchise. That, in addition to all the economic downturn, the Surgeon General of the United States put a 10% excise tax on the revenue. And these were small franchises, $200,000-$300,000 loans, and they were all failing. We ended up doing 54 of these franchisees just because the economy and that business model died. And so I got a real education real fast. Um, but what are the other things that go wrong? And I run into this too often. Fraud by the seller. I've had situations where I'll give you a limousine company where the guy sold the business, took over, and the week later, the seller opened up a competing business, even though there's a non compete, down the street, stole all the employees, and left this immigrant with $2.3 million loan that he had no ability to repay. And that's only one of several of those. I have one that I just picked up the client 3 weeks ago from a restaurant property where the books were fabricated. So you can't be too careful in doing your due diligence to see what it is you're actually buying. There is situations where there's collusion by the bank. You have a bank officer that in a seller of a business that have decided they're going to get this thing sold, and there may be things that are presented to you that just frankly aren't true. Again, a due diligence issue. Got the one I mentioned about the tanning franchise, and another one I've got right now. Right now, I've got 5 clients in the same franchise system that are all failing for the same reason. The franchisor put out manufactured financial statements as people that are vouching for the business, that are being paid to vouch for the business, and even so far as the business that are closing because of failure. The franchisor has a clause in there that if they represent that they're failing, that they'll get slapped with a lawsuit and a penalty, and it's scaring the heck out of these guys. And then the other one is business conditions can change, as we went through with this recent pandemic. I'll give you an example. I had a tour company in San Francisco that was doing about 150,000 in revenue per month. Their SBA payment was 34,000. The pandemic hit. They were a tour provider. Pandemic hit. Their revenue went from 150,000 to zero when the pandemic hit and didn't come back ever actually. And so they're stuck with a $34,000 a month payment, personal guarantee, and no business. So business conditions can change. That said, the SBA product is great. The failure rate is really low. I think Ron would probably have better access to this number than I, but it's something like 0.5%, and that's out of 50,000 loans a year that are made. So the number of times that they fail is pretty small. I only see those. I don't see all the success stories. So so again, my view is a little jaundiced, and um, so the SBA product, other than the EIDL, is provided to the bank as a credit enhancement to the borrower. In other words, you as a borrower are going in and you can't qualify for lending somewhere else. The SBA program provides the bank a guarantee that some percentage, and the percentage varies depending on the climate, from something like 75% to as high as 90% of the loan is guaranteed by the SBA that if you don't pay the loan, the SBA will. That doesn't mean that you don't pay it back. It just means instead of paying the bank, you're paying the SBA at some point. So, and what does that mean? It means that any owner of the business that's 20% or more owner is going to be required to provide a personal guarantee um, and collateral. But with that said, there's exceptions to that, and there's exceptions based on the state. So the number one thing lenders like to do is tie up your home and threaten you with the fact that if you don't pay the loan back, you're going to lose your home. Well, that's true in many states, not true in Florida, not true in Texas. If you happen to live in those states, they can't touch those assets. So it's part of what the loan looks like depends on the state you're in. Also, some banks are more aggressive in getting the loans than others, and some are just plain not careful. Give you an example. One of the things that the SBA uh, doesn't require but suggests is that if it's a husband and wife, that both the husband and wife sign the guarantee. And that's sometimes a little tricky because sometimes your wife doesn't want to put her life on hold for your dream. But there are a lot of banks that don't follow through with that. They only get the signature of one party. Why is that important? Well, in a community property state like California, you default on the loan, the bank's got a problem. They're going to foreclose on a half interest of a house. What are they going to do with that? And because they can't get to the other half because the wife didn't sign. Some banks, frankly, forget in their paperwork process. Oftentimes, they put a trust deed or a mortgage on the property. Sometimes they don't. It gets missed in the paperwork. It's never registered, and the house is not directly affected. And I can tell you from experience, every bank is different. There's no two banks that are exactly the same. And in fact, even within the same bank, a large Midwestern bank that I currently have 5 cases with, every one of them is handled differently. And that's my job on the front end. When you get into trouble, it's the first thing I do is I take a look at all that paperwork, and I have you fill out a form. It's called a Form 770. It's the SBA's personal financial statement, which you're signing under penalty of perjury. It means don't lie. But the other side of that is the different than bankruptcy. There's no look back period with when you're dealing with the SBA. So your assets can be one thing today and something else tomorrow, and there's no ability for them to track back and say, "Hey, what happened to all those assets?" So a big part of my process is before we ever get to the SBA or start talking to the bank is maybe have you talk to an asset protection attorney and put assets away. Make sure that you've loaded up your retirement accounts. your 529 plan, all assets that generally are not touchable by the bank.
So what you just said, and I just want to make sure that I understand this correctly, because as I work with a lot of borrowers, they're asking me these types of questions. I don't have the answers, but what I think I just heard you say is that if a borrower goes into an SBA loan situation, they obtain the SBA loan and it's not working out, they are going to go in default. At that moment, not before they apply, but at that moment, if they were to contact someone like you, they could start protecting their assets before they go into the default process. Is that correct?
Absolutely true.
That's great to know. Thank you.
Sometimes we'll get in a situation where the financial statement that you provided 2 years ago when you applied for the loan shows things that aren't on your financial statement today. Sometimes we have to answer those questions. But there was a Supreme Court justice many years ago, actually Indian descent, American Indian descent, by the name of Learned Hand, and he said, as it relates to income taxes, is that your obligation is to do everything in your power to minimize the amount of tax you pay. In other words, you're not obligated to finance the government to any more extent than you legally have to. Same is true here. Um, while your financial statement may look one way 3 years ago, it may look way better today, and way different today. And I'll tell you one other thing, because IRAs, KEOs, those kind of plans are protected. One thing you never want to do is fund a failing business with a protected asset. You,
Mm,
not, not only do you pay income tax on that money when you take it out, but you pay a penalty to the government, and it also says that you're being kind of stupid because you've already worked years to put this little bit of a nest egg away, and now you're going to invest that in something that, if you stand back and look at it realistically, isn't working. You're not required to exhaust all your assets to make a business work. Um, and with that said, there's other circumstances. I've got one client right now, 36 years old, started a chain of restaurants. At this point in time, he owns 5 pieces of real estate that are all over encumbered with mortgages. He has 2 EIDL loans, one for $2 million, another one smaller. He has 7 SBA loans, and he's defaulted on all of them. I've got one bank out of 7 banks that have given him loans that has sued him to recover. The rest of them all thrown up their hands and said, okay, we'll turn it over to the SBA. Now, that creates a problem for me in that I don't want him to file bankruptcy. He doesn't want to file bankruptcy, but we have to marshal the assets to try to satisfy all these different creditors. So it becomes that's an unusually difficult challenge for me, but that's my job. I do these every day. I've done hundreds of them at this point, and I've seen just about every circumstance that you can think of. What I can tell you is that when you default on these loans, the banks are usually pretty aggressive on month one and month two. Um, what happens when you retain somebody like me under the Fair Debt Collection Act? They can't call you anymore. And I don't care how many times they call me. So all the harassing phone calls you get for late payments come to me and not you. And frankly, as soon as they see my name, they stop calling because they know I'm not going to get anywhere. But at that point in time, I take control of the case and I walk you through to an end. Now, how defaults work is under contract under uh, SBA SOP 5052-3, I think it is. Um, the bank has a process that they're supposed to follow when a loan gets into trouble. Um, Part of that process is they're contracted to get an offer in compromise if that's the direction you go. They approve it and they pass it on to the SBA. This is not a process that's quick. It takes it takes months, sometimes years, to get the bank to respond to an offer. And then once they do, it goes to the SBA where it may take months or again years before it's resolved. I've got one case that dates back to 1973. Um,
Older than me.
that the SBA has basically resigned itself. It has a security interest in a condo in Playa del Rey, and they said we'll just settle with it when he dies, and so that's one option. But an example that San Francisco tour operator. It's been 3 years I've had that case. It's a bank that's now merged with another bank, and we've offered to take the bank officer to a free lunch just to say hi, and he's canceled on us 5 times in the last year. And they've done nothing to collect this money. They seem to have zero interest in collecting the money. The other side, some banks are much quicker about it. They'll negotiate for a short period of time, and then suddenly you'll get a letter in the mail from the SBA that says you've got 60 days to pay, or we're going to turn it over to the Department of Treasury. So, Department of Treasury is the default position for SBA lenders under something called the TOP, Treasury Offset Program. And what the Treasury Offset Program means is that any money that you're due from the federal government for any reason can be applied to an outstanding loan. So if you've got a tax return coming this next year, you can expect not to get it. That under the TOP program, it'll be applied to your loan. So what do? Make sure you don't owe the government any money, or that you're getting any refund from the government, that you're going to owe them money. Then they can't take it. So there's all kinds of strategies to make this better, and it's up to you to find a way to get it. And sometimes that means coming to somebody like me that wants your choice.
So there are very few of you, John, throughout the country. And when an individual sees in their future they're going to default on an SBA loan, other than knowing someone like me who knows someone like you, how do they usually come to you? Do they come to you direct? Do they Google your name? Do they come through the lender? Share that with us.
So, like I said, there's only 6 or 7 of us that do this nationwide. I do zero advertising. I have 2 posts online. One is on Reddit. I seem to get 2 or 3 people that contact me through Reddit every month. Most of my business comes by referral. I don't need a lot of cases. Even though I look 21, I'm actually a few years older, and
Surprising.
don't want to work quite that hard. So people find me. I don't look that hard for them, and that's where the process starts. I do want to say one other thing that people often miss, and that is when you have an SBA loan, there's actually um, 4 moving parts. There's you, who's the borrower. There's the entity that you usually set up to take the money and run the business. There's the business itself, which if you're acquiring it, it's the asset, it's the goodwill, etc., that you've acquired and put into this entity. And then there's the underlying assets that it takes to run the business. Now, in most SBA loans, you're going to see, especially in business acquisition, 90% of the value is called goodwill. That means if the business goes away, there's nothing for the bank to collect on. But they will file a lien on the existing assets. And why all that's important? When you default on the loan, sometimes it's the case that the business can survive, they just can't survive under the current debt circumstance. So oftentimes the business can survive, and you'll find a friend or business associate that's in a position to acquire the assets of the business and continue the business on. And sometimes this can happen without your employees even know that the transaction happened. But the bank is happy to get those assets to this new person because their other option is to send it to auction where they get nothing literally for the collateral they're selling. So oftentimes we'll transfer this business to somebody else, and because there's no restriction against you having a job, that doesn't mean that you can't be a consultant to that business and continue to earn money. You just can't be an owner. Um, but it doesn't mean you have to walk away, turn your pockets inside out, and start selling pencils on a street corner. There are solutions that can keep you employed and keep you compliant with the law. And again, that's all stuff. That's all stuff that comes from years of experience and knowing what you can and can't do. So that's me.
So, John, as you work with these individuals, I'm sure that you have a lot of conversations with them. What is the state of mind of these individuals going through this process? It's got to be stressful. Nobody wants this. How do you help them through this? And what do you see as their state of mind as they go through this process? And you said literally that it might not even end one individual until he passes away. How do they deal with that?
Yeah, it's tough, and especially on the front end. People have all kinds of imaginings of what's going to happen, that they're going to get led away in handcuffs because they haven't repaid this loan, that their life is ruined forever. Lots of people come in, they think my only solution is bankruptcy, and the 10 years of hell that come with a bankruptcy filing. If you're defaulting on an SBA loan, there are basically two things that you're stuck with. Trade creditors go away because if you set up an entity, when the entity stops, they can sue all they want. They can't collect against anything because you didn't personally guarantee it. The two things are the SBA loan guarantee and the lease guarantee. Those are the two liabilities that you have that generally you're personally liable for. And we walk through both of those and come up with solutions uh, for those both of those. And then most people come in tremendous despair, tremendous feeling of guilt that they're a failure at something that they really had high hopes for. And the reality is far different from what they think it is. This is generally something that's very solvable. The banks deal with it every day, even though the number of defaults are small. They still deal with them all the time. So nobody's out to take your life away, and this is just a process. And very quickly, we'll have this behind you, and you'll move on. The only thing I can tell you is if you're a guarantor on an SBA loan and you go through an offer and compromise process, you're forever precluded from being a guarantor on another SBA loan. That doesn't mean you can't have a business that has an SBA loan. You just can't be the guarantor. There's all kinds of ways to work around this.
So here's a question as you were talking that came to my mind. What is the delta that you see between what is owed? So this is the first question. What's the delta between what is owed and what is settled on? And then the second question, and this is one that I deal with all the time, how often do lenders or the SBA actually repossess a home that has been pledged in security of that loan?
Okay, great questions. So the first answer is um, depends, and that
I
is
love it.
the amount that it's settled for has nothing to do with the amount owed. I've settled $2.5 million case for $8,000. And I've had to settle other cases that for 90% of what's owed. It all comes down to your ability to pay. If you've got a bunch of unprotected assets, if you've got a bunch of money sitting at stock portfolio, the SB is going to say you can afford to pay me, and they won't settle. If you're a senior citizen, your health is compromised, you have literally no assets, then they'll settle for nearly nothing. The SBA commissioner has come out and said multiple times over multiple years, if the amount that's offered in an offer in compromise is equal to or greater than what we'd expect to get in forced collection, our policy is to accept the offer and move on. So that's the bottom line. There is no magic percentage number that you're going to settle for. It all depends on my ability to negotiate the best settlement for you, and also for me on the front end to help you protect as many assets as you can. What was your other question, Ryan?
In regard to how often does the bank or the SBA
Repossession. Yeah,
repossess the home?
almost never. Uh, I can think of in almost 20 years I've been doing this, I've had three homes that have been lost. One was California husband and wife got divorced. He owned a he owned a dental practice in Texas. He never told her he stopped paying on the loan, in spite of years of notices. One day she came home and found the sale notice posted on her garage door. That's how she found out that the loan was in default. And that one, we were so far down the road, there was nothing I could do to save it. And it was sad because she had a special needs child. She was older, and now she was being forced to move out of a home she'd been in for 25 years and move into an apartment. Uh, and those are so sad, but they're so seldom. The SBA SOP says in the document that all efforts are to be pursued to avoid foreclosing on personal residence.
Got it. I'm going to tell a story right now that I think the audience will appreciate. This was 2 years ago, and I received a call from a woman. She was frantic. She said that she received a notice that her home was going to go into repossession because of failure to pay an SBA loan. How did she find me? She found me through Google. She left a voicemail and I called her back. When we were speaking, she told me that she didn't even know that she had an SBA loan. So it turns out, I believe, that her estranged husband added her. She may or may not have known, but definitely didn't know the repercussions. When I called her back, I said, "Hey, look, I don't do with this. I help people get SBA loans, but I know someone who I think can help you." So I gave her your contact information, John. She followed up, and I heard from her. It was about 3 to 4 weeks later. She called me back and she said, "Ryan, thank you for calling me back. You didn't need to do that. Number one. Number two, John, who you referred me to, saved my home." So that was an unbelievable story from someone that called me. I referred them to you. What I'd like you to do, if you can, is give us two success stories in detail from beginning to end, how you have been contacted by someone, what they were facing in the default process, and how you mitigated the damages directly to them.
There's one more thing that I want to add, and that is this is something that Ryan doesn't see that I see. I can tell you the high degree of probability which lenders are going to go after you if you default on the loan. No, it's never the process of anybody like Ryan to say stay away from this bank or stay away from that bank because if things go wrong, they're going to go bad. But it's something to consider. Some banks are incredibly aggressive, and one here in San Diego that loan officer that I talked to on one quick occasion says. We never let a borrower off the hook. We'll take them to the ground before we'll settle for $1 less than what's owed. I've got other lenders that recognize that it's a process and it's a business decision, and sometimes things go wrong, and handle it very respectfully. They're not all the same. So, two success stories. I got a call a year and a half ago, from a company that was a reseller to the federal government. Um, and by that I mean they have an open purchase order system with the government. Any government agency that needs a product from a generator to replacement parts can place it through them. They'll go to whatever supplier has it, place the order, and they pick up a percentage on the exchange. Well, if you remember, about a year and a half ago, inflation started to hit pretty hard, and prices from the suppliers were changing faster than the government could update their purchasing process. So they were ending up upside down on every order. And they got to the point where they couldn't place another order because they were losing money every time they bought something from the government. And so they were forced to close. It was a great business. It was doing somewhere in the order of $5 million in sales a month. And they had to walk away. Now, there was one guarantor on the loan. The bank never had his wife sign. But when he contacted me, he thought his world was ending. The reality was, while that case is still outstanding, I haven't heard from the SBA or the bank in over a year, but we got him out of the process. We shut the business down in an orderly manner. He moved on. He actually relocated out of New Jersey to Arizona, took a job somewhere else, and his wife's assets are protected. Fortunately, they set things up so that most of the assets were in his wife's name, and their life has gone on. And even though the loan is still outstanding, there's no pressure on them to get anything done. Another example, Five brothers and sisters opened um, uh, African-based um, restaurant in Ohio. Now they were making food that was from where they grew up, and they were quite successful until the economy changed. Their business went down very quickly. The woman that contacted me was really just a signer. She'd never been involved in the business. And one thing about the SBA loans that I didn't mention, something called a joint and several liability. That's a legal term that says five people sign, you're not responsible for 1/5 of the debt. You're each responsible for 100% of the debt. And if you've got the deepest pockets, they're coming after you. And in this case, she had the deepest pockets. She had nothing to do with the business. And so we had to walk through the process. It took me about a year to finally get all of the partners settled. And I think all said and done, we settled for something less than 20% of the amount that was owed. And she, they're great references for me. And I'll even do a third one. This was many years ago. Guy was a pretty successful guy. He had $1 million in his IRA account. Business failed. We never had to disclose the amount of money to the government that was in the IRA. They had the ability to look, but we settled for around 15 cents on the dollar, and his $1 million IRA was fine. Never touched.
Yeah, those are all great success stories, and I'm sure that those people will give you great references. John, as I summarize what I'm hearing you say, number one, individuals who are applying for an SBA loan need to do their due diligence. They need to do their due diligence on the seller, on the franchise. They need to, again, this is highly recommended, obtain a quality of earnings report so that an actual professional reviews what is being represented as the revenue and profitability of the business. And then what I heard you say is if someone, let's say they do all of that, they're a good citizen, but things go wrong, right? So you've said the economy has been an issue. Sometimes they buy a lemon and they didn't know it. And when they do start to see the chips fall, they're headed toward defaulting on an SBA loan, they need to speak with someone like you because what you do is you give them a different perspective, you give them peace of mind. And then because you are an expert, and I love your background, by the way, you have an amazing background and as an attorney, an accountant, serial entrepreneur. You're someone who can empathize with them, but also your wide variety of professions also supports you in decision making and knowledge of how to approach the situation and the scenario. And then once you lay it all out for them, it's actually not as bad as they think. And then the most important thing is you've laid out, you give them that peace of mind, and there is life after an SBA loan default. And I think for a lot of individuals who are applying for an SBA loan who are worried about defaulting, that's what they're worried about. They're worried about being absolutely crushed. They're worried about their own personal finances if they're married with children or just married. They're worried about their spouse. They're worried about their nest egg, right? Especially if they're older, they've accumulated a lot in retirement. And what you've said here today is it's not the end. It is something that will take time, could take the rest of their life, but it's not the end of their life and they can move on. And so, John, I really appreciate you sharing all the information that you shared with us. And what I'd like to do now is just give you an opportunity to speak to the audience one last time. What are some things that you share with people when you speak with them, whether before they've applied for an SBA loan or once they've been introduced to you? And then I'd like you to share with us how to contact you so that if anyone finds themselves in this unfortunate situation, they can meet you and get that peace of mind directly from you.
So after working in the M&A industry for nearly 20 years, I've seen every kind of transaction there is, and I can tell you that, especially in a business acquisition situation, you almost can't do enough due diligence. You really have to assess your ability to take on responsibility. client that Ryan and I shared recently was doubling the size of their business by acquiring an entity that's on the East Coast and they're on the West Coast. And my counsel to this person is, can you really afford to be in two places at one time? Because with a business that far away, I don't know how you absorb that into your culture without you being there. And so sometimes it's a matter of sitting back and really assessing if this is the right thing to do. And for my years of working with SCORE, uh, I can't tell you the number of times somebody walked in with a great idea that was the same one I've heard for the last 20 people that came in. And I can tell you about 10 years ago, it was opening up a yogurt shop. And everybody was going to open up a yogurt shop, and most of them failed. Or people came in that were graphic designers and got laid off and said, I'm going to go into business for myself. Even though they had no client base, they didn't know where they were, and they weren't marketing people. So you really got to assess your ability and decide if it's something that you want to risk your life savings on. Some people are better off with a job. Not everybody's cut out to be an entrepreneur.
Great advice.
In addition to that, I can't underestimate asset protection as part of, if you start to accumulate some wealth, talk to an asset protection attorney. Make sure you set things up so that not just an SBA loan going back, but a slip and fall on your property. Uh, um, you run into a school bus full of nuns and small children, and suddenly you're being sued for millions of dollars. There are ways to protect yourself. Don't ignore that. And then if you do get in a situation where things aren't going right, contact a professional. Don't think that you need to know everything. There's a reason why some of us specialize in what we do, and we'll lead you down a path that gets you to the end without all the false starts and all the worry and all the stress. And with that said, I I take phone calls all the time. I give advice for free. Um, um, I will give you guidance and direction to a certain point. At some point, I start to charge, but a lot of times it's just giving you a guidance and direction and some assurance that things aren't as bad as you think they are. You can do that by contact me. My phone number 619-279-7522. Or you can contact me by email. It's my name, JOHNHOMAN at gmail.com, John Homan at gmail.com. And either of those will get your response, usually within 48 hours.
That's great. John, I just want to end this with the thought that you just shared. It was something that was shared with me several years ago. I was in loan committee, the loan was declined, and I was at my desk after that. The president of the bank who was on the loan committee, he meanders out of the room, sees me at my desk, and I have my tail between my legs a little bit. And he comes over to me and he just puts his hand on the desk and he says, "Hey Ryan, I just want you to know something." He said, "The bank has never been hurt by a loan that we didn't approve." I just thought, what an amazing perspective. And that's exactly what you shared. When I speak with people, they're so excited. They're the only ones who've ever had this idea. They're the perfect person for this business. It's going to succeed. And what they really need to do, as you shared, right? They need to assess who they are and they need to be honest about that. And if they can't honestly assess who they are and what they're good at and what they will do with this business, that's when they need to seek professionals who do this every day, all day. And they might get the answer, like you said, right, John? Hey, this isn't for you. Or you asked the tough question: how are you going to do this on the West Coast and the East Coast simultaneously when you've hung a $5 million SBA loan around your neck? So, just a parting thought to everyone who's listening to this: if you haven't applied for that SBA loan yet, you're doing your due diligence, you're researching, and you've come across this podcast, just understand that the right thing for you to do might not be to apply for that SBA loan. It might not be to acquire that business. However, on the other hand, if you are certain of who you are, you know your strengths, you know your gifts, other people around you see the same thing, and this is a great opportunity for you, don't be afraid to take it. And if for some reason there's a slip and fall, it's not the end of the world. And that's why people like John are here to serve you, to protect you, and to guide you through obviously a very difficult situation. but one that you will get through. John, I really appreciate you doing this. This is long overdue. You are someone that I look up to. You are an expert in this field. You have a wide variety of knowledge that comes through in how you deal with people and how you help them. And so I hope that you have a great rest of your day, and I'll see you soon.
Thank you. Ryan, it's great to work with you, and I know I refer clients to you all the time because there's no one I know better that sits on the same side of the table as the borrower and gets the job done. Thanks.
Absolutely. Thank you.